Question 1. When evaluating the merits of a commercial property policy, a retail business in downtown Los Angeles suffers a loss when a water pipe bursts overnight, damaging inventory and flooring. The insured has a building and personal property coverage form with special causes of loss. Which of the following best describes how the insurer should respond? A. Deny the claim because water damage is excluded under all forms. B. Cover the loss because the special form covers accidental discharge from plumbing. C. Pay only for the flooring as inventory is not considered covered property. D. Reduce the payment due to a vacancy clause restriction. Answer. Correct answer B. Cover the loss because the special form covers accidental discharge from plumbing. Explanation. Under the special causes of loss form, coverage is provided for direct physical loss unless specifically excluded. Unlike the basic or broad forms, the special form includes accidental discharge or leakage of water from plumbing systems unless caused by freezing while the building is vacant and not properly heated. The flooring and inventory all under covered properties per the Building and Personal Property Coverage for BPP. California Insurance Code supports that insurers must apply policy terms fairly and must not deny claims unless a clear exclusion applies. No exclusion exists here, so coverage is owed. Question 2. From the perspective of ethical conduct, Samantha, a licensed California insurance producer, overhears her coworker convincing a client to surrender an existing commercial policy and buy a new one solely to increase commission. What action should Samantha take to align with state regulations? A. Ignore it unless the client complains. B. Report it to her manager only. C. Report it to the California Department of Insurance, CDI. D. Confront the coworker directly and ask them to stop. Answer. Correct answer. C. Report it to the California Department of Insurance, CDI. Explanation. This situation falls under twisting, a prohibited practice under California Insurance Code SSS, which prohibits misrepresentation to induce policy changes for the agent's benefit. Samantha is bound by fiduciary and ethical obligations, including the duty to report misconduct that harms clients or the integrity of the industry. The CD expects licensees to uphold these standards, and failing to report such behavior can result in disciplinary action for complicity. Question 3. As illustrated by a recent claim, Mr. Darnell operates a bakery insured under BOP. A power outage caused by a storm leads to spoilage of perishable goods. Which BOP provision, if any, would most likely provide coverage for this loss? A. Property coverage under business personal property. B. Extra expense coverage. C. Spoilage endorsement if purchased. D. Business income coverage. Answer. Correct answer. C. Spoilage endorsement if purchased. Explanation. Spoilage from a power outage is not automatically covered under standard BOP provisions. However, a spoilage endorsement can be added to cover perishable items when caused by mechanical breakdown or power failure. ISO Form BP 430 outlines spoilage coverage. Without this endorsement, claims for spoiled food would be denied. The California Insurance Code requires policy terms to clearly state what's covered and what's not. If this endorsement isn't part of the policy, no payment is owed. Question 4. The traditional approach to evaluating risk in underwriting includes reviewing hazards. Which of the following scenarios represents a moral hazard rather than a physical or morale hazard? A. A business installs flammable insulation without code approval. B. An insured leaves the premises unlocked at night. C. A business owner exaggerates past losses to inflate a claim. D. An office building has outdated electrical wiring. Answer. Correct answer. C. A business owner exaggerates past losses to inflate a claim. Explanation. Moral hazards involve dishonest behavior such as fraud, misrepresentation, or intentional loss. In contrast, physical hazards involve tangible conditions like outdated wiring, and morale hazards stem from carelessness like leaving doors unlocked. California law, particularly the Insurance Fraud Prevention Act, California Insurance Code assessed moral hazards due to their severe impact on insurance rates and system integrity. Insurers rely on honesty, and moral hazard breaches undermine that trust. Question 5. Through careful analysis of contractual structure, a commercial property policy is often referred to as a contract of adhesion. What does this imply about the policy's enforceability in disputes over ambiguous language? A. The insurer's interpretation always prevails. B. The court will interpret ambiguity against the insurer. C. Both parties must renegotiate the contract. D. The policy is unenforceable due to imbalance. Answer. Correct answer, B. The court will interpret ambiguity against the insurer. Explanation. An adhesion contract means the policy is offered on a take-it-or-leave-it basis with little room for negotiation. Under California contract law and upheld in numerous cases, e.g. Awins Company v. Superior Court, courts resolve ambiguities against the drafter, typically the insurer. This ensures fairness in consumer protection. The California Insurance Code SSE enforces that policyholders should not be penalized for unclear terms they didn't draft. Question 6. Under the assumption that Istagacia owns a metal fabrication company and uses leased heavy equipment, which inland marine coverage would best protect his financial interest in the leased machinery stored on site and occasionally transported between job locations? A. Contractor's equipment coverage. B. Installation floater. C. Commercial articles coverage. D. Valuable papers and records. Answer. Correct answer, A. Contractor's equipment coverage. Explanation. Contractor's equipment coverage is designed for mobile machinery or equipment used in construction or similar operations. It applies whether the equipment is owned, leased, or rented and provides protection during storage, use, or transit. Neither installation floaters, which cover items being installed, nor commercial articles for cameras instruments, nor valuable papers coverage applies. California commercial insurance rules support tailoring inland marine endorsements to specific operational risks. Question 7. With respect to the principles of indemnity, why does commercial insurance not allow an insured to profit from a loss? A. Because profit is taxable and insurers avoid tax obligations. B. To comply with California Insurance Code restrictions. C. Because profit would increase the cost of premiums. D. To prevent moral hazard and reinforce risk-sharing principles. Answer. Correct answer, D. To prevent moral hazard and reinforce risk-sharing principles. Explanation. The principle of indemnity ensures that insureds are restored to their financial condition before the loss without profit. This prevents moral hazard, where insureds might deliberately cause loss for gain. California Insurance Code SSE enforces that insurance contracts compensate only for actual loss. Profiting from claims undermines this principle, creates adverse selection and rising premium costs for all policyholders. Question 8. During the process of licensing, Julia submits false education credentials to the California Department of Insurance. She is granted a license but later caught. What is the most likely regulatory action the commissioner can take? A. Impose a fine only if she commits a future violation. B. Immediately revoke her license and potentially pursue criminal charges. C. Require her to complete education again. D. Place her license on probation without further action. Answer. Correct answer, B. Immediately revoke her license and potentially pursue criminal charges. Explanation. Providing false information during licensing violates California Insurance Code SS.2 and SS. The Commissioner has authority under SS to revoke or deny license if the applicant has provided false statements or concealed material facts. Additionally, California Penal Code SS classifies knowingly submitting false information. Perjury subject to criminal prosecution. Revocation is the minimum disciplinary response. Question 9. Taking into account reinsurance practices, what is the primary benefit of facultative reinsurance for a commercial insurer underwriting a large, unique risk such as a stadium? A. Automatically covers all similar risks. B. Offers broader protection than treaty reinsurance. C. Allows for tailored coverage for specific high-value exposures. D. Guarantees regulatory approval from the CDIR. Answer. Correct answer, C. Allows for tailored coverage for specific high-value exposures. Explanation. Facultative reinsurance is arranged on A case-by-case basis offering insurers the flexibility to cede part of an individual risk to a reinsurer. It is ideal for large, unusual risks like stadiums where treaty reinsurance may not suffice. The California Insurance Code governs reinsurance agreements and ensures they meet SOP and disclosure standards. Facultative arrangements help manage exposure while retaining control over specific underwriting decisions. Question 10. In contrast to direct insurance sales, which of the following accurately describes the unique role of an insurance broker in California's commercial insurance market? A. Brokers represent the insurer in negotiations. B. Brokers owe fiduciary duty only to themselves. C. Brokers act on behalf of insureds and not insurers. D. Brokers are not licensed by the CDA. Answer. Correct answer C. Brokers act on behalf of insureds and not insurers. Explanation. In California, a broker is legally defined under Insurance Code SS&SS as someone who, for compensation, acts on behalf of the insured, not the insurer. Brokers owe fiduciary duties to their clients, including full disclosure, diligence, and loyalty. Unlike agents, brokers are not authorized to bind coverage on behalf of insurers unless they dual authority. Misunderstanding this distinction can lead to EO claims or regulatory penalties. Question 11. To illustrate this point, Mr. Blake owns a tech warehouse and suffered a fire loss. He submits a claim including an inflated value for damaged servers. During investigation, it is discovered that he knowingly overstated the value to recover more. What is the most appropriate course of action by the insurer under California law? A. Deny only the inflated portion and pay the rest. B. Refer the case to the California Department of Insurance Fraud Division and deny the claim. C. Pay the full amount but flag the account. D. Request documentation before deciding. Answer. Correct answer. B. Refer the case to the California Department of Insurance Fraud Division and deny the claim. Explanation. According to California Insurance Code SS.4, knowingly submitting fraudulent claim is felony and insurers are required to report such activity. Under the anti-fraud statutes, if fraud is involved, the entire claim can be denied, not just the inflated part. This protects the integrity of the insurance system and discourages fraudulent behavior. The insurer must also notify the CDIS Fraud Division. Question 12. From a historical standpoint, why does commercial general liability (CGL) coverage distinguish between occurrence and claims made forms in policy structure? A. To allow longer time to file claims under claims-made policies. B. To reduce defense cost obligations of the insurer. C. To manage liability exposures tied to when the injury occurs versus when the claim is made. D. To avoid duplicate coverage for the same event. Answer. Correct answer C. To manage liability exposures tied to when the injury occurs versus when the claim is made. Explanation. The key difference lies in the trigger. Occurrence policies cover losses when the event happens, even if reported later. Claims-made policies only respond if the claim is made during the policy period. This is critical for long-tail liabilities, e.g. environmental harm, product defects, as CGL forms in California. Regulations require clear disclosure of these distinctions to ensure proper risk transfer and reduce disputes over timing. Question 13. The underlying principle of indemnity in commercial property insurance is to restore the insured to their financial condition before the loss. Which of the following valuation methods best supports this principle? A. Functional replacement cost. B. Market value. C. Actual cash value. D. Stated value. Answer. Correct answer C. Actual cash value. Explanation. Actual cash value (ACV) equals replacement cost minus depreciation. It reflects the insured's true economic loss at the time of the incident and supports the principle of indemnity. No better, no worse than before. While stated value and functional replacement may deviate from strict indemnity, California insurance practices use ACV unless otherwise endorsed. SIC SS outlines how ACV must be calculated. Question 14. In the absence of proper documentation, Isley's commercial property insurer denied her claim for valuable artwork destroyed in warehouse fire. She had verbally informed her agent about the items, but never listed them in the schedule. What concept is most relevant to explain this denial? Estopel B. Adhesion. C. Insurable interest. D. Representations. Answer. Correct answer A. Estoppel. Explanation. Estoppel prevents the party from asserting rights if their previous conduct misled the other. However, it only applies if the insurer or its agent accepted the verbal disclosure as valid coverage. Since no written endorsement or schedule was issued, the policy remains unchanged. Under SIC SS, material facts must not be concealed, and oral representations are generally insufficient unless relied upon formally. Question 15. Is evidenced by policy structures. A commercial insurance policy that contains take it or leave it with terms and is drafted solely by the insurer without negotiation is referred to as what type of contract? A. Aleatory contract. B. Adhesion contract. C. Personal contract. D. Unilateral contract. Answer. Correct answer B. Adhesion contract. Explanation. An adhesion contract is a non-negotiable agreement offered by one party insurer to another insured. Courts interpret ambiguities against the drafter per California Civil Code SS. This ensures fairness when policyholders lack bargaining power. It differs from aleatory contracts, which involve an equal exchange, or unilateral contracts, which involve one-sided promises. Question 16. The correlation between contract law and insurance practice is illustrated by the 5 essential elements of a contract. Which of the following is not considered an essential element of a valid insurance contract in California? A. Mutual agreement. B. Consideration. C. Legal purpose. D. Equal bargaining power. Answer. Correct answer D. Equal bargaining power. Explanation. Equal bargaining power is not required for contract formation. The 5 essential elements under California contract law include mutual agreement, competent parties, legal purpose, consideration, and offer acceptance. Insurance contracts inherently involve an equal power, which is why courts treat them as contracts of adhesion and protect policyholders against ambiguous terms. Question 17. When faced with overlapping coverages under a business owner's policy, Bob Estes Santos is confused about whether his policy covers business income loss due to forced closure from a nearby gas leak, no direct property damage. What is the correct interpretation? A. Covered automatically as part of extra expense. B. Not covered unless civil authority coverage applies. C. Covered under building coverage. D. Denied because BOP never includes business income. Answer. Correct answer B. Not covered unless civil authority coverage applies. Explanation. Civil authority coverage in a BOP applies when access to the premises is prohibited by a government order due to damage to nearby property by a covered peril. Since Estes Santos premises had no direct damage, business income coverage alone doesn't apply. However, civil authority can apply if endorsed. As OPP 03 outlines this, and the California Insurance Code requires insurers to honor the specific terms of policy triggers. Question 18. By comparing agent authority types, which type of authority exists when a customer reasonably believes the agent has power to act on behalf of the insurer, even if not explicitly granted? A. Express authority. B. Implied authority. C. Apparent authority. D. Binding authority. Answer. Correct answer C. Apparent authority. Explanation. Apparent authority arises when the insurer's conduct leads the public to believe the agent has authority even if no formal authorization exists. California courts uphold apparent authority to protect insureds from ambiguous agent-insurer relationships. SIC SS and related case law hold insurers accountable for representations made by their agents that appear legitimate to third parties. Question 19. In a modern context of privacy regulations, which of the following must a California commercial lines insurer do under the California Consumer Privacy Act CCPA? A. Avoid storing any client personal data. B. Report client purchases to credit bureaus. C. Provide a clear privacy notice explaining data use and consumer rights. D. Share client data with affiliated agencies automatically. Answer. Correct answer C. Provide a clear privacy notice explaining data use and consumer rights. Explanation. Under the California Consumer Privacy Act CCPA, insurers must inform clients how their personal information is collected, used, and shared, and provide opt-out rights. This includes the right to request deletion or access. The California Insurance Code intersects with CPA, requiring insurers to also comply with privacy requirements under SIC SS.4. Sharing data without consent is strictly prohibited unless for underwriting or legal compliance. Question 20. Based on the information provided in an audit, a commercial property insured has underreported values by 40%, triggering the coinsurance clause. If the insured has an 80% coinsurance requirement but only carried 40% of required insurance, what will happen to the $100,000 covered loss? A. Insurer pays full claim since it's below policy limits. B. Insurer denies the claim entirely. C. Insurer pays $50,000 based on coinsurance penalty. D. Insurer pays $80,000 due to the 80% rule. Answer. Correct answer. C. Insurer pays $50,000 based on coinsurance penalty. Explanation. The coinsurance penalty applies when the insured fails to meet the minimum required coverage, in this case 80%. The insurer will apply the formula payment equals insurance carried insurance required x loss equals 40% x equals 50,000 text payment equals left frac text insurance carried text required right times text loss equals left frac 40% 80% right times 100,000 equals 50,000 payment equals insurance required insurance carried x loss equals 80% x equals 50,000 per ISO forms and SIC SS. The penalty encourages adequate insurance. Failing to meet the coinsurance requirement reduces the claim payout proportionally. Question 21. Answer. Correct answer. B. Pay the claim because smoke is a covered peril under the special form. Explanation. The special causes of loss form is an all-risk policy covering any direct physical loss not specifically excluded. Smoke damage is covered regardless of flame presence unless excluded due to maintenance or contamination. As OCP 1030 confirms, smokers a covered peril. Under California Insurance Code SS policies must honor coverage for all perils not explicitly excluded. No exclusion applies here. Question 22. To better understand agency responsibilities, consider that is Rodriguez, a licensed broker, failed to disclose a known pending lawsuit against a potential commercial insured when submitting an application. What regulatory or ethical standard did she most likely violate? A. Warranty of representation. B. Concealment of a material fact. C. Fiduciary negligence. D. Rescission clause violation. Answer. Correct answer. B. Concealment of a material fact. Explanation. Under California Insurance Code SS, concealment is the neglect to communicate that which party knows and ought to communicate even if not asked. Pending lawsuit directly affects underwriting and risk acceptance, making it material fact. Concealment can lead to policy rescission or denial of claims. Brokers are obligated to provide full disclosure when acting on behalf of the client. Question 23. By evaluating risk classifications, why does a commercial property policy typically assign higher premiums to a restaurant compared to an office building of similar size and value? A. The office has more expensive contents. B. Restaurants generate more profit and require more coverage. C. The restaurant poses greater fire hazard due to cooking equipment. D. Office buildings use outdated heating systems. Answer. Correct answer. C. The restaurant poses greater fire hazard due to cooking equipment. Explanation. Insurers rate commercial properties based on hazards and exposure types. Restaurants have increased fire risk from cooking equipment, grease buildup, and foot traffic, thus representing a higher moral and physical hazard. As per ISO Commercial Property Manual and California Rate Filing Standards, hazard classes determine base rates. Office buildings have lower hazard classification compared to food service operations. Question 24. As a result of poor policy comprehension, Istitana believed his new commercial auto policy covered personal use of the company van for his vacation. The policy explicitly excludes personal use. Which legal principle prevents Istitana from receiving benefits not stated in the contract? A. Representation. B. Waiver. C. Estoppel. D. Adhesion. Answer. Correct answer. C. Estoppel. Explanation. Estoppel applies when one party relies on another's conduct to their detriment. However, if the insurer never represented coverage for personal use and the exclusion is clearly stated, estoppel does not apply. Iste tanner and not claim benefit not offered. Courts often uphold contractual language when it's unambiguous. California contract law civil code SS holds that he who takes the benefit must also bear the burden. Question 25. A critical examination of claims handling reveals that an insurer must act within a certain time frame when acknowledging or investigating a claim. According to the California Fair Claims Settlement Practices Regulations, how many calendar days does an insurer have to acknowledge receipt of a claim? A. 10 calendar days. B. 15 business days. C. 30 calendar days. D. 21 business days. Answer. Correct answer A. 10 calendar days. Explanation. Per California Code of Regulations, Title 10 SS.5, the insurers must acknowledge receipt of claim within 15 calendar days after notice and begin investigation within 15 days as well. However, if the insurer has to contact the claimant or respond to inquiries, that must be done within 10 calendar days. Efficient claim handling is required under the Unfair Practices Act to allay of deceptive practices. Question 26. The most significant aspect of an insurable event under California Insurance Code Section 250 is that it must meet which of the following conditions? A. It must be speculative and intentional. B. It must be uncertain and result in a financial loss. C. It must be foreseeable and preventable. D. It must be criminal and recoverable. Answer. Correct answer. B. It must be uncertain and result in a financial loss. Explanation. Under California Insurance Code SS, an insurable event must involve contingent or unknown event, which, if it occurs, results in damage to person with an insurable interest. The event must be fortuitous, not intentional or certain to happen. This aligns with the concept of risk transfer, distinguishing insurable risks from speculative or inevitable ones. Question 27. In contrast to automatic coverage, which of the following inland marine coverages requires scheduled listing of specific high-value portable items like cameras or musical instruments? A. Bailey's customer insurance. B. Contractor's equipment floater. C. Commercial articles coverage. D. Accounts receivable coverage. Answer. Correct answer. C. Commercial articles coverage. Explanation. Commercial articles coverage insures items such as cameras, musical instruments, or fine art that are specifically scheduled. It applies to professional use or valuable hobby equipment. The policyholder must list each item with value, and coverage applies both on premises and in transit. This differs from Bailey's coverage, covers customer property or accounts receivable, which financial records. Question 20. From multiple perspectives, why is the personal nature of an insurance contract significant in commercial lines? A. Because commercial policies can't be transferred without insurer consent. B. Because they are required to list all stakeholders. C. Because they cover only physical damage, not liabilities. D. Because they expire automatically when the named insured retires. Answer. Correct answer. A. Because commercial policies can't be transferred without insurer consent. Explanation. Insurance contracts are personal in nature, meaning they apply only to the named insured unless the insurer consents to transfer. California Insurance Code SS and standard ISO commercial policies include assignment clauses restricting transfer. This ensures proper risk evaluation and prevents unintended coverage transfers, which may alter profile. Question 29. Upon closer examination, a business's commercial crime policy includes a $50,000 limit for employee theft. If two employees collude to steal $80,000, what is the maximum payout under most standard forms? A. $80,000 because both are employees. B. $50,000 because the limit applies per occurrence. C. $25,000 split between both claims. D. $40,000 as collusion reduces coverage by 50%. Answer. Correct answer. B. $50,000 because the limit applies per occurrence. Explanation. Under the ASA CR01 form, the limit for employee theft applies per occurrence, regardless of how many employees are involved. Collusion does not increase the limit, and there is no pro rata application. The key definition is one or more employees acting alone or in collusion. California Insurance Code follows standard form interpretation, modified by endorsement. Question 30. Among the various valuation methods, which one would best protect a commercial policyholder from rising construction costs after a partial loss to a 20-year-old building? A. Actual cash value. B. Market value. C. Replacement cost. D. Functional replacement cost. Answer. Correct answer. C. Replacement cost. Explanation. Replacement cost coverage pays to repair or replace property without depreciation using like-kind materials and current labor costs. It helps protect against inflation and construction cost increases, which is critical for older properties. California Insurance Code SS.5 supports replacement cost coverage as long as the insured commits to rebuild within policy limits and within a required timeframe.